Hello traders, Gary Wagner with the gold forecast here from Honolulu, Hawaii, approximately 8:30 a.m. in the morning on Friday. Happy Aloha Friday, as we say on the islands. And this is the gold forecast's weekend review. Traders, what a week we've had in the market. Forex gold, cash gold currently trading at 1325, 1326. The candlestick that we're looking at to kind of cap the week off, and oh, what a week we've had in the market, is this rickshaw man. It's a long-legged doji. Another name for it is a rickshaw man. And what I want to do on today's report, we'll kind of review the week a little bit, but more importantly, I'm going to talk to you a little bit to continue the talk we had yesterday about a particular pattern and type of candlestick that I look for at the bottom of these waves. And we have seen it time and time again. Yesterday, I told you I'm on the lookout for it again today. I'm talking about the doji and the umbrella line. The key on a doji or an umbrella line is the body size. The body, of course, is the relationship between the open and the close. Let's say that this is the open up here and that's the close, and then the high of the day to the low of the day would give us this long-legged doji, very similar to what we have right here. Now, there are variations that you'll get with this smaller body, such as whether it's a hammer or what we call an inverted hammer, or some variation thereof. But the key is it's the small body that you get and the longer tail that you get that makes this candle significant. Why am I spending so much time talking about this funny little candle? Well, let me show you, historically speaking, why I find it so important. These circled areas are the bottoms of definitive waves, the bottom of two. Actually, this is a subwave in here, but it is a bottom. This is the bottom of wave 4 right in here. Market moves up. This is the bottom of the correction C, and wave 1, and then the bottom of 2. Now, in each of these cases, the bottom of the market can be characterized by after a downtrend, you get a black candle that's followed by a consolidating candle, a doji, or an umbrella line. Here you have the inverted hammer called a shooting star if it's at the top of the market right up in here. Here you have that long-legged doji kind of capping this bottom here. Again, small-bodied. Down here, another small-bodied doji-like. And then here, two dojis. Now, here is what I have uncovered and I find very interesting. There is a candlestick pattern called a three-river morning star. Simply put, after a defined downtrend, you get a series of black candles. As the market goes down, it opens, it creates a lower low, but it closes right near the low, right in this area here, and that's what gives it that small body or a doji. That's followed by an update or a red candle. It is actually these three candles that form the three-river morning star. What you'll notice is that on each of these bottoms, there is some variation of that pattern. In other words, black, consolidating candle, red, and of course, this candle here is our confirming candle. So if you look, black, consolidating red, black consolidating red, black consolidating red, and so forth. In other words, as a market comes down, what happens is there is a basic point in which the power shifts between the bulls and the bears. There is a turning point in the market, and there is no better candle to illustrate a turning point than a doji. In other words, the open and close being very, very close. And then, of course, your confirming candle up here. Now, we talked yesterday about the fact that I'm going to keep my eyes out for this candle. Time and time again, if this candle is followed by a red candle on next week's trading, of course, we're going to have something like this. That's our aggressive buy signal, and this is our conservative buy signal. But I will tell you this. This pattern, time and time again, has proved to be invaluable in terms of the information that it's given us in being able to project and pivot point the bottoms of waves, the end of wave. And it is that red candle that would actually complete that pattern. Another piece of compelling data right now is when we put up our basic Fibonacci retracement. I am putting up what I call our shallow Fibonacci retracement. A shallow, to me, is simply drawing it from the bottom of 3 to the top of 3. A deep Fibonacci correction, in other words, to give us much deeper and wider or longer retracement points, would start at the bottom of 1, in other words, after that correction, and take us all the way to the top. When we calculate our Fibonacci points, here's what I'm finding interesting. We were looking for a potential for it to stop either at 23%, which is here at 1353. It went through that very, very quickly. I thought on a shallow correction we'd probably see 1331. In fact, it went well below that. But look at this, traders. When we look at our 50% retracement, 1313, and then we look at the low that we got in last night's trading right in there, of course, we are right there in terms of it finding a potential bottom. So to me, we have a couple of pieces of very, very compelling evidence to point to the opportunity for bottom. We've got to see confirmation. We have to see follow through tomorrow. But I can tell you this, traders, I am extremely, extremely excited when I look at this chart right now, because realize this. This bottom, once in fact we find it, will be the final impulse wave to the upside before we go into our corrective period. Now, in terms of forecasting, I do have to change my forecast right now. I am anticipating that wave number 5 should be about equal the distance or amplitude to wave 1. Wave 1 was a $100 move. If we take this low at 1314, it puts my new calculated target high right now, $100 from that low, at 1413. This has been Gary Wagner, wishing you, as always, good trading. It's been an awesome week, traders. I look forward to speaking to you on Sunday for the Daily Report. Bye-bye.